Hello everyone, my name is Nick and this is LODE TV. As always, if this is your first time joining us, please go ahead and subscribe to our channel as well as check out LODE.1 to learn more about how LODE is putting idle silver to work. And if you're already a member, welcome back. Now today's guest is Gerald Celente, publisher of the Trends Journal. Gerald, thank you for joining us.
Oh, thanks for having me on, Nick.
Now Gerald, last week was another volatile week for the markets, basically across the entire board. We saw the Dow Jones lose 800 points only to recover most of that. We saw reversals from gold and silver, see them recover as well. And probably most significantly, we're now witnessing the inversion of the U.S. yield curve. What's to make of all this volatility?
Well, let's go back to when the markets were down 800 points. Then it was reported a few days later that President Trump got on the phone and talked to the big banksters, the top three. And let's look at the stocks of the bank stocks. They've been going way down because you can't make any money with negative zero interest rates. And that's been hurting the shares. So all of a sudden, after El Presidente talks to the banksters, poof, the market goes up. Nothing changed. And then we look back, let's go back to last December, 2018, not ancient history. The Dow had the worst December since the Great Depression. And then on the night before Christmas, when all through the house, nobody was watching and the markets are plummeting, Treasury Secretary Mnuchin gets on the phone and calls up 6 banksters. And here's the BS that they're giving us. Well, we wanted to find out if they had enough liquidity. And last week, well, Trump wanted to find out to know, are consumers doing okay? Well, Trump also said on Sunday that consumers have more cash in their pockets that they know what to do with and they're rich, quote, not a perfect quote, but close to it. The game is rigged. Everybody knows there's the plunge protection team. Isn't that a nice name for rigging the casino when they start losing too much dough? Go over to China back in 2015, 2016, when the markets were going down. Oh, they had the state protection team. So it's country after country. So Trump is artificially, I believe, with the banksters, propping up the markets because nothing has changed. But yet you go to the next day, the next week, and now you're hearing, oh, we're not going to go into a recession. Everything's fine. Credit Suisse said it's all right. Trump said there's no recession. But yet we're looking around the world. Oh, it's wonderful over there in Germany, the world's 4th largest economy. The Bundesbank said they're going into a recession. You go around the world, whether it's Argentina, India, name it. Name the country, low interest rates and real problems. So to me, the markets are artificially propped up, and they will continue to be because this is the presidential reality show, the elections in 2020. They will do everything they can to lower interest rates, quantitative easing, which Trump is calling for more of, to artificially boost the equity market.
So given all of this artificial inflation that you've spoken about, do you feel that a recession is inbound for the United States of America?
Oh, absolutely. I believe it's going to happen. There's always wild cards. Nobody can predict the future. I mean, just 2 examples. What's going on in Hong Kong and China and India ripping up the agreement signed in 1947. No, we own Kashmir, and they don't have any rights anymore. And the 2 nuclear powers, Pakistan and India, facing off to each other. So there's always the wild cards. Minus the wild cards, we don't see the recession really hitting hard until after the 2020 election because they will do everything they can to artificially prop it up. But we're not looking for a recession globally or in the United States. We're looking for the greatest depression. We're saying this is going to be worse than the 1930s depression. And there are a number of reasons why, but we could start with saying history is repeating itself. Trade wars, currency wars, Great Depression, World War II. Trade wars, currency wars, greatest depression, World War III. You could even start seeing that heat up as well. Unless, of course, people do something and don't let the maniacs who are running the show do what they continue to do and get us into war when all else fails. They get us to war, take us to war. So that's the way we see it. I want to give you an example. Let's go over to Europe and think about all the populist movements that they call them and protests against all the migrants coming in. Go back to 1930. How many people were on the planet? About 2 billion. Okay, 1930, less than 100 years, we've added 5.5 billion people. The human waves, that's one of our top trends for 2019. The human waves of people leaving countries where they have no future, corrupt, violence, economic disasters. They're going to be going more and more into other countries trying to find a future. What we're saying is this greatest depression, it's going to be more than economic, it's global-nomic. When all else fails, as I said, they take you to war, but when people lose everything and have nothing left to lose, they lose it. So you're going to see a lot of tough times coming on the streets if this thing isn't reversed very quickly.
And on that note, do you believe that there's anything that the average individual can do to play a role in the reversal of these trends, or is it inevitable?
No, it does not take a majority to prevail, but rather an irate, tireless minority, keen on setting brush fires of freedom in the minds of men, Samuel Adams, and women. So look what's going on in Hong Kong. 7.4 million people. Last Sunday, 1.4 million took to the streets. Oh, and they were holding umbrellas. It's raining. In the United States, it's a big deal to put on a big pink pussy hat and get 1 million people go out one day. And then they go home and forget about it. You don't have the courage right now in this country to fight it. Other countries are doing it, but not here. Of course it could be changed. As I say, if Trump can, if Obama can, if Clinton can, if Bush can you? Can I? I mean, these aren't, superhuman beings. I mean, far from it. So of course it could change, but the people right now, they don't have the fight within them.
Well put, Gerald. Switching to precious metals now, we've seen a significant rally for gold over the past few months, reaching highs that we haven't seen in about 6 years, with silver making 18-month highs itself. What are your short to medium predictions for these two metals?
Okay. If you go back to our trend alert that we sent out on June 6th when gold was selling at $1,332 an ounce, the headline was Gold Bull Run. Also the headline in our Trends Journal. I've been saying the same thing for 6 years. That gold had to break over $1,450 an ounce for it to gain strength. I saw the bull run begin at $1,332 because it solidified over the $1,325 mark it was having trouble with. My forecast is the downside risk of gold is only about $1,400. You mentioned that as the equity markets have been going up, gold's been going down. Yes, it has been, but it's still over $1,500 an ounce. So it's really showing strength over that 1,450. I believe the next breakout point is going to hit 2,000. When? I would say sooner rather than later. It's hard to say how many months, but you're looking at what's going on about the negative yields. You're a nice guy, Nick. I know this is the first time when we met, but I got a deal for you. I got this 10, 20, or 30-year bond, and I want you to buy one. And in 10, 20, or 30 years, depending on which one you buy, I'm going to give you back less money than what you paid for it because you're such a nice guy. You can't make this crap up. Negative bond yields? Oh, how about let's go to Switzerland? What's their interest rate? Oh, 0.75. How about going to Denmark? Why don't we get a new mortgage, and we're not going to charge any interest? They're dumping more monetary methadone into the system to keep the artificial bull running. That's what's going to keep gold going up because the smart money is going into gold. Don't believe me? Ask Ray Dalio, the founder and leader of Bridgewater Associates, the biggest hedge fund in the world, coming out 2 weeks after our gold bull run, being bullish on gold. That's where I see gold going.
Now, you've spoken quite a bit about gold, but what about silver?
Silver follows to me. I began buying gold in 1978, and silver always follows, but silver does have a downside too. And the downside is that in the greatest depression, silver is also used for manufacturing technology from high tech to heavy industry. It's used in a lot of different ways. So if production goes way down, that may put a little damper on silver prices. But silver follows gold, and it's also a good attraction for the people that can't afford gold. So I just believe that silver, will mirror gold on the way up.
I know the community will be happy to hear you say that, as the LODE project is based in silver itself. Switching to cryptocurrencies, though, Bitcoin has been performing as a non-correlating asset class, positioning itself to be a true portfolio diversifier, similar to gold. What are your thoughts on this market as a whole?
Let's look at the big picture again, the globalnomic picture. They're accusing China, for example, of purposely lowering their currency, the yuan. We don't see that at all. China has a debt to GDP ratio of 300. They got $40 trillion worth of debt. They're the world's largest importer of oil and gas. What's that based in? Petrodollars. You think they want a weak currency to buy this stuff? How about all those Chinese companies that have about $3.5 trillion worth of debt? They're going to pay it back in dollars. Okay? Now, they want to pay it back as their currency goes lower. So going back to Bitcoin and cryptocurrencies. Go back to 2015, 2016. The Chinese yuan was going down. There were massive capital outflows. Same thing going on now. They're starting again. Also out of Hong Kong, massive capital outflows. They don't want that to happen. That's why they banned Bitcoin. That's when Bitcoin really started taking off, back in 2015, when the Chinese were buying it all up because they see their currency going down. And again, rather than gold and silver, this is the new generation's way of finding that gold and silver in a very different way and at very different prices. So even now, with China having all these restrictions on cryptocurrencies, the people are still finding ways to buy them. So to answer your question, I believe that cryptocurrencies have a place in the future also as a safe haven asset, getting away from watching your currency collapse. Wouldn't it be great to be in Argentina right now and see our peso collapsing every day, or living in Venezuela? Well, let's take a trip to Indonesia. We can go anywhere. You want to get out of your currency and to get into something better. And that's why we see a future in this.
All right, Gerald, one last question for you today. Again, thank you so much for joining us. We're very grateful to have you. Out of all the markets that we've spoken about today, and given the state of global affairs, where do you feel the best opportunity is for investors and individuals?
I can't give financial advice. I'm not permitted to, because I'm not a financial advisor. I'm a trend forecaster. So I only speaking for myself, as I say, guns, gold, and a getaway plan. And I'm not kidding about that. We're in New York over here, and maybe you can tell by my accent, I'm a New Yorker. I'm a Napolitano born in the Bronx, one of the luckiest guys. You're born to be free. But I know New York inside out from, statewide. When 9/11 happened, they said airplanes were coming down the Hudson River, 45 minutes north of New York, Indian Point nuclear power plant. What if one of those planes hit nuclear power plant? What if there's a terrorist strike that knocks off nuclear power plants in Atlanta, or in Georgia, in New York, in California? You're going to see chaos like you never could imagine. And again, with the Greatest Depression, with wars going on, there's always that chaos that is the wild card. So here's what I say. Prepare for the worst. If the worst doesn't happen, you've lost nothing. If the worst happens and you're not prepared, you can lose everything. So, do what you can to be smart about this and start preparing so you can prevail and prosper, because we see very difficult times ahead. And I'm just going to say something on a personal note. We all go through our ups and downs in life. This is a time for people, as I see it, and the motto of the Trends Journal is think for yourself, to get in the best shape you can, physically, emotionally, and spiritually. Game's over, fight's on. And when I say spiritually, I'm not talking about religions. I'm talking about becoming the better person that you could become. And again, I'm the last person to judge anybody what they ever did in their life. I pull my stuff. But you grow older and you try to get smarter.
That's all we have for today's interview with Gerald Celente, publisher of the Trends Journal. Thank you so much for joining us. And as always, if this is your first time, please go ahead and subscribe to our channel, as well as check out LODE.1 to learn more about how LODE is putting idle silver to work. That's all for today, guys, and take care.